So to start off, we have Michael here. So Michael is the principal and founder. Michael is an experienced lawyer, accountant, and business consultant, having spent more than 35 years helping businesses mitigate risk, grow, and solve problems, specifically with tax debt. So Michael has been with Tax Assure for more than 10 years, helping businesses with tax-related challenges. We're going to listen into that a little bit more in detail. And, having worked as a lawyer and spent most of his time in commercial disputes, Michael has dual perspective of having pursued debt coupled with negotiating with the ATO. So all these tips are going to be really good for you to take away, maybe share it back with your accountant or even speak to Michael right after this session too. So Michael, before we kind of get into the detail of everything else, why don't you tell us a little bit more about how Tax Assure helps businesses?
100%, Cynthia, and thanks so much for having me today, and thank you everybody for joining us. And look, one thing I would say too is that Cynthia mentioned about questions. Please feel free to sort of throw questions in as we go. I like an interactive session, so if we can, we'll try and answer things as we go through and sort of keep it all relevant for you. But look, in terms of Tax Assure, we're a specialist sort of ATO debt management business. All we do day in, day out is help businesses that owe money to the ATO. Most of our clients are referred to us by a professional advisor, being an accountant, a lawyer, or some other advisor. Although having said that, we are getting a lot of businesses coming to us directly at the moment through Google searches. We have a YouTube channel, which I sort of recommend people maybe to have a look at, finding it there, because look, this is a big issue for many, many businesses at the moment. And I'll give you some figures in a little while and you'll see the extent of the problem. But it really is a hot topic. I think Cynthia said it's one of the largest webinars that Swoop have done, because it is something that's affecting many, many businesses. It's tough out there, as it is in sort of business land, and on top of that, if you've got an ATO debt, then it can be a little bit scary at the moment. But look, hopefully by the end of this, you realise there are some solutions. And look, it is serious, but there are solutions. So in terms of clients that we work with, we broadly do the 4 things you can see on the screen there. We get in and halt recovery action for them, and that's a big thing because at the moment the ATO are going very hard. So we get in, stop the recovery action, and most importantly, get time from the ATO, put in place a strategy to get them out the other side. And that will normally be one of 2 things, either a long-term payment plan, but something that's sort of suited to the cash flow, and something that's sustainable, because that's one of the things we've seen a lot of. A lot of people are entering payment plans with the ATO. They simply can't afford them, but they do them anyway because they feel that, they've got no alternative. That's what the ATO said, take it or leave it. And that's not actually the case. So that's sort of the first thing that we do. Then, as I said, we get in, negotiate the payment plan, and really that's putting in place something that there's no 2 payment plans for us are the same. We put something in that meets, and it may not be a straight line payment plan, but it's something that firstly the business can afford, but most importantly that the ATO can approve, because we see a lot of clients where their accountants or themselves have been negotiating and they're just getting knockback after knockback after knockback, because the ATO has quite strict criteria. People often say it's a bit random, it depends who you get. That's not the case. They look, to an extent, a little bit like that, but mainly they are very they're very regimented on what they can and cannot approve. And so you need to understand that and actually make sure that you are giving them something they can approve. The other thing we do is we reduce the debt. And I don't mean the core tax debt. Anybody who says to you, I can go in and get the core tax debt removed, and they're not a liquidator, run a mile, because the ATO can't do that. It's not their money, it's taxpayer money. But what they can do is, if there are grounds, they can reduce the interest and penalties. And we do a lot of work around this. And sometimes that can be 20, 30, 40% of the debt. We had one a couple of weeks ago, it was 70% of the debt. You can imagine if you can get 70% of the debt wiped, that turns that business in particular from a non-viable business to a viable business. But the interest, it sort of adds up quickly. It's 11.38% calculated daily. So there's a lot of brokers and finance people on the webinar. You guys can sort of work out what the effective rate is around that. But it's, it adds up very quickly. We're able to go back, not just looking at the debt that's on the portal at the moment, but we can go back years if there are grounds. And actually, that one that had the 70% that I was talking about, we're able to go back 5 years. And a lot of that interest they'd already paid. So it just came straight off the bottom. We've had others where we're actually been able to put them into a refund situation. So we're able to clear the debt, plus there was an excess and they got a refund. The other thing we do, and again, seeing a lot of this, is where, and I mentioned before, people have payment plans in place. And a lot of these were done during COVID when the ATO was, being quite generous. And then sort of coming out of COVID, it became a bit more difficult. And maybe they were good arrangements at the time, but we're seeing they're stifling cash flow, they're stifling growth. And so we, again, go in, renegotiate those arrangements, couple it with a removal of the interest and penalties if there are grounds, and then get them back on their feet.
Yeah. What do you think that's driving some of this sort of behavior from the ATO, right? So we're saying that there's a lot of ATO debt outstanding there. Businesses are getting pressed by them. Is it due largely to COVID or the bushfires, the floods? What is it that's happening in the background?
Yeah, look, if we can jump to the next slide, I'll explain. It's actually a bit of a numbers game. If you can see on the screen there, there's a number there that says $50 billion owing to the ATO. That's the undisputed debt. That's not debt that's subject to people fighting it. It's not stuff that's caught up in the insolvency. It gets hand on the heart business to say we owe that. And to put some context around that number, that came out of the 2023 ATO annual report. We think the number's significantly more than that because it doesn't include debt that's not lodged. And so many clients we are seeing have unlodged debt. So we think it's probably more than 60 billion. And I've heard some people say it could be as high as $70 billion. Now, put it in context, 30 June 19, which was prior to all the nasties and when the world went crazy with COVID and in Australia in particular had bushfires, floods and all the things that you mentioned, Cynthia, the number was 26.5 billion. So just using that figure and assuming that figure's right, that's an 89% increase in 4 years. So, that means, and we also know that 2/3 of that is owing by small business. So this isn't a big business problem. This is a small business problem. And we also know that, so that tells us two things. There's a lot more taxpayers that have ATO debt and are non-compliant. And secondly, that the level of debt per business has increased. And for the brokers on the webinar today, that brings you guys into play because a lot of the businesses, we try to get them and they pay their debt out of cash flow. A lot of them can't at the moment. So they need to get funding in to help with what we're doing, but also they just need funding generally to clear this debt. So what that has meant is that because the debt is so high and historically over the top, and on top of that, we have so many non-compliant taxpayers. There's been a lot of pressure on the commissioner, and so it's like anything pendulum. If it was here, then during COVID it kind of went there, and some of you, I'm sure, dealt with the ATO during that time, and the ATO was saying, don't worry about it. Don't bother paying us your debt. We'll put it all on hold. And they did it for 9 months, and then they did it for another 9 months. Lodge, you don't even have to pay your ongoings. And so the debt ballooned out. And they did that to support business. And it was, I think, an appropriate step at the time. But now the pendulum swung the other end because people got a bit complacent during that period, stopped paying their debts, didn't put the money aside because it wasn't as though they were saying, they weren't writing the debt off. They were doing what the banks were doing, leaving the debt there, but just saying, pay us later. And interest to continue to accrue except for a short period. And now it's out of control. And so the pendulum swung and they're going very hard.
And how do you think they're doing this now? I know that a number of our customers are coming in saying, I've got an outstanding ATO debt, my accountant's working through it, or either they don't have things in place for it. But I suppose, how are they pursuing it and helping small businesses now to get back on track?
Yeah, look, really simply, I've got that thing back as business as usual. I'm not talking about the ATO generally. I'm talking about their debt area. And I actually think it's probably a little bit beyond business as usual. I've been doing this for 11 years, and this is the toughest I've seen the ATO, the toughest in terms of really chasing businesses, using all their legal powers, and talk a little bit about what they are. But you've only got to look at what the rhetoric. Well, I guess one of the other things, people often say to me, are they chasing particular debts, particular industries, and so forth? The answer is no. They're chasing every debt. We've got debts on our books that we're managing from $50,000 to, I think the largest we've got at the moment is about $26 million for a listed and everything in between. But our sweet spot that we deal with is in that sort of $500,000. But they are chasing everything. Look, there are some industries where they're a bit tougher in terms of dealing with terms and so forth, but they're after everything. And so, you know, you've only got to look at what their the rhetoric coming out of it. And if you I mentioned before the 2023 annual report, they said implementing targeted strategies to address to address collectible debt will remain a key focus in 2023, 2024. They also said that collectible debt was named as one of the 2 top priorities of the ATO's 2023 plan. So they're going hard. It's not going to slow down. They are very serious about chasing debt. Now, in terms of, you know, how they're going to do that, I've got sort of the 4 horses of the apocalypse, I think, if that's the right way to put it, up there. But just to give some numbers around that, again, in their 2023 financial year, they issued just under 18,000 directive penalty notices. And for those that, I hope, you know, nobody's received any of those and have an intimate knowledge, and I'll explain a little bit more about what they are. But we also know that just in the first half of this financial year, they've issued an additional 30,000. So the directive penalty notice is broadly, and I'll explain a little bit more in a minute, but it's a document that allows the ATO to chase a director personally for company debts that are occurred through the business. They've also issued just under 3,000 garnishee notices in 2023. And again, we know that those numbers have increased because of what we're seeing. Liquidations are back. They're now past where they were prior to COVID. And, you know, I used to say that, you know, we're kind of getting back to pre-COVID levels or pre-pandemic levels. We're way past that now. And I saw a stat this morning that it may be up as much as 26%. And a lot of those are ATO. If you look at, we get the ATO list, the ATO are highly represented in those lists. And then the other thing that they're doing is the credit reporting. And, you know, that's a newish thing. It was brought in the legislation prior to COVID, but it allows the ATO to report ATO debts to credit reporting agencies, which again has an impact. And look, if I'll just quickly, you know, as I said, we know that these things are happening, and on the credit reporting, again, they just in November last year, they disclosed 9,000 businesses. So, you know, we're not talking small numbers. They're going very hard around all of this. The ATO, you know, have said that the Commission has got an $82 million slush fund. Well, I won't call it a slush fund, but it's a budget, if I can put it that way, to, and it was again announced that they would chase, you know, debts over $100,000 or more than 2 years old. Now, if you think about that, it's not hard to get $100,000 in debt and 2 years old. Well, all the debts that were put on hold during COVID, they're all 2 years old. So, you know, many businesses are on the firing line. And the other thing that they've just done is they've used in the past debt collection agencies, and there's a company called Recoveries Corp, which I hope none of you have heard from, but they've just restarted that, and they've again announced that they would be reporting or sending 150,000 taxpayers to be chased for their debts by 30 June by Recoveries Corp. It's funny, it was reported as that they would sue the debt recovery company onto these taxpayers, and I had to look it up. I'd never heard the word sue. I thought it was a typo, but it actually means to attack or worry. So it gives you an idea of where the ATO are at the moment and what they're doing. Just quickly, Cynthia, if I can, I might just run quickly through those because most people probably understand what those are. But for those that don't, and hopefully, as I said, nobody's sort of seen these personally, but a directive penalty notice, as I mentioned, is a document that allows the ATO, where a company doesn't pay its, and there's the 3 main things, which are the 3 main debts that businesses have. You know, it's pay as you go withholding, superannuation, or GST. If they're not paid by a company, then the director becomes personally liable when they're not paid. But in order for the ATO to sue the director, they have to issue one of these directive penalty notices. And when I started doing this years ago, they were very scarce. They're now like confetti, and they're actually one of the main tools that the ATO is using at the moment, because they've realised that it's a very quick way for the ATO to get the director's attention. They've got very strict timeframes. They're, you know, quite a detailed legal document. But broadly, if you are a director and you haven't paid one of those, you've got 21 days to either pay the debt or you become personally liable. And in some cases, you don't even get the 21 days depending on your lodgements. So, you know, that's putting a lot of pressure, and that can be devastating for a director of a company who sets up a company thinking that, you know, it's all over there and I've got my home over here and it's safe. The home's no longer safe because this creates a personal liability. The other one there is that, sorry, Cynthia, did you?
I just have a question as well. How long does the ATO wait before they issue out a director's penalty notice? Do they wait 3 months, 6 months? Like,
Yeah, really good question. Really good question. And the answer is it depends. Because it depends on a whole range of things. If you and I were having this conversation 6 or 9 months ago, I would say they generally wait until they feel like they're getting nowhere with the company. Because generally what the way the ATO has dealt with this is that they've said, we'll chase the company, but if we feel like we're not going to, either the company's not engaging or we don't feel we're going to get recovery, then we'll have a go at the directors. That's been flipped on its head, and we've actually seen a number of cases recently where they're chasing the directors before the company. So in the risk of giving a lawyer's answer that it depends, it does depend on a whole range of things. It depends on the type of debt. If it's superannuation that's outstanding, you're going to get a director penalty notice fairly quickly. If your compliance is poor, again, you're going to get a director penalty notice. There was a thing in the press yesterday, which is even more concerning for directors, that the ATO are now doing data matching. And if they data match and find that a director has assets, you're more likely to get a director penalty notice. So they're using it as a way to get directors to engage and make a decision about whether or not they can pay the business can pay the debt. But we see so many directors that are under incredible pressure because they've got this document. As I said, it's 21 days. It's 21 days from the date they send it, not the date you get it, and it's has devastating consequences for them.
And
the other thing, sorry, go on.
sorry, I was just wondering, does it make a difference if I was a business owner with outstanding debt, right, and I'm on a payment plan? Do you think I would get a director's penalty notice for taking my time to pay that, or because I'm on a payment plan, that's okay?
Yeah, look, the answer is this. I'll sort of take a step back. If you're not on a payment plan, you're unmanaged, and then you're very, very likely to get a director. If you're on a payment plan, you're very, very unlikely. Technically, they can, but I haven't seen it where they've issued one during the course of a payment plan. What I have seen is and this isn't common, is where the payment plan is put in place and the ATO has doubts about whether the business can do it, and they'll issue a director penalty notice in conjunction with the payment plan, and as they say, to secure the payment plan. But if you're on a payment plan and you're meeting it, and by that you've got to meet the payments under the payment plan and your ongoings and everything, then to date I haven't seen where the ATO then randomly 3 months later throw down a director penalty notice. The whole point of it is they want to have businesses to engage, and if they're engaging and they're paying the debt down, there's no reason for the ATO to even look at the matter again.
Yeah, that was very good.
Yeah, no, that's good. Thank you. And look, and again, if there's questions coming from the audience, please throw them in as well. I don't know whether they were yours or the audience, but yeah, please keep coming.
Mine, because it's common. Most of the inquiries that we get for when we ask customers, what are your purpose of funds? Why are you looking to obtain working capital or term loan debt? It is largely around refinancing my debt. I couldn't get an approval for my ATO plan. I want to pay this ATO debt outstanding. And so I guess I would just want to know, how much time do we have to support them as funding managers or brokers in the place before they get a director's penalty notice, and how detrimental, I guess, as well, is that going to affect the viability of the business going forward? What can small business owners do?
Yeah, look, it's a really good question. And the answer is that you've got to move quickly on this, and that's probably one of the biggest differences that we've seen is that as I said, you look through and there's all the sort of 4 horsemen of the apocalypse that they can use. Normally, the ATO would, if we were looking at that sort of thing, would probably take to run through them, and liquidation will be the final one that they would do. And what we find is that at the moment they're issuing it. Firstly, they're issuing credit reporting, and that's we've been told is just to get businesses to engage, but again, has significant impact on the business, because if you get a reporting to one of the credit agencies, and we've seen a lot of this where then all the alerts go out to funder, they go out to trade creditors and so forth, and we're having businesses that are saying our funders looking to funding, or we're now being put on COD because all our trade terms have been because of all of this. But again, looking at this, normally, as I said, that would sort of take 12, 18 months, 2 years to sort of run through the whole process. I had one just before Christmas, and that was a signage business in WA. They got all 4 within 2 months. So and the ATO, what they're doing around this is that they're looking at it and going, the order is broadly, they issue the credit reporting to get the business to engage. If that doesn't work, by engage, they want to put a payment plan in place. It's not just ring up, talk to the ATO, maybe make some voluntary payments. It's a little bit like you're pregnant or you're not. You're either managed, i.e. in an enforceable payment plan, or you're not. So they issue the credit reporting, then they issue the director penalty notice, and the objective of that is to, is to get the business to engage, but it also brings the director's assets into the asset pool that the ATO can recover against if they don't, again, pay it down or do something about it. They issue a garnishee notice, and for those that don't know what that is, that's a document that generally goes to either a bank or your customers, people who either hold or owe you money, and instead of paying you, they pay the ATO. So that then brings money in from third parties, and then the final one is they issue the liquidation or statutory demand from the assets of the business. So, but look, in terms of maybe if we can jump to the next slide. It's not all, this all sounds fairly gloomy, but, we're helping businesses every day to get through this and everything. And look, what I would say is that, bad news is you can't ignore the ATO anymore. And I often say to people, if you don't engage with the ATO will engage with you. So you're better to get on the front foot and you're better to get in early. So, but as I said, the ATO, and you can see the ATO will work with businesses. And look, they've got a remit that they need to get that $50 billion figure down. There's two ways they can do that. They can collect it or they can write it off. And the way they write it off is they wind up the businesses. Now, both options work in terms of their what they need to achieve, but obviously the ATO would like to get paid if they can. So, as I said, the ATO work, but you've got to do it, I guess, in two ways: quickly, and that sort of I think leads to what you were saying, Cynthia, around have they got much time? The answer is at the moment very little time, because the ATO have dramatically truncated the timeframes for doing these things. But also, in terms of what the ATO can do for you, if this is the range of things the ATO can do for you when you're right at the beginning, where you've had none of the legal recovery action, and you maybe had a phone call or an email or a letter saying you please pay your debt, and at this end is where you're about to get wound up. The further you go down, the scope of what the ATO will agree to in terms of payment terms, in terms of removing interest and penalties, changes dramatically. So we always say, for goodness sake, get in quickly. I've said the honeymoon is over. A lot of businesses are saying, well, we haven't heard anything from the ATO, so it's all okay, nothing's happening. Well, that's not the case. The ATO's got quite sophisticated systems. There's a lot happening in the background, and then out of the blue, they say, oh, we got this director penalty notice, and we thought we'd heard nothing, and then we got that. It's a bit like, the bands that are the overnight success, but they've been playing in pubs for 20 years, and then suddenly they get a hit. There is things going on. So you must engage quickly. And then most importantly, they really need to engage properly. And, I've said there the computer says no, because that's, for those that, like Little Britain, that's the sort of way it works. This is because the ATO have got quite detailed legal practice statements that you need to comply with. This is done on an application basis. You put in an application for a payment plan. The ATO don't need to give you a payment plan. It's not a right. It's a discretion to give it. And if they feel that the business is not viable, then they won't give it, and they're not allowed to give it. But and then they also don't need to remit interest and penalties. So they've got quite strict legal practice statements. If you miss any of the components of it, it's a no. And more so than certainly the time I've been doing this, they're applying them strictly. Whereas in the past, we talked to a lot of accountants, and they'd say, oh, we just put a story into the portal and we get there where we need to be. Well, that's not working. And so many accountants are coming back to us now saying, we would have normally got this through, but we're not getting this through now. And the ATO is actually asking us for all this information, which we've never had to provide. Well, that information they're asking for is in the legal practice statements. It's always been there, well, not always, but certainly for the last 11 years. And we put it in our applications because it's so the ATO, as I said, they're being really strict. They're looking very closely, not just at the ability of the business to be able to pay the debt, but also the viability of the business. And so there's a lot more requirements that they need to provide. But as I said, there's always a solution. You just need to engage. You need to engage properly. You need to meet the requirements. And, it's not just us. Many accountants know how to do this. Many don't. But, it's you can't, you say, well, what can they do? If you have got that debt, stop worrying about it, because, the worry is always worst anyway. get in touch with your accountant, get in touch with the ATO, get in touch with us, and start the process of fixing this, because there will be a solution.
Yeah. I guess another question, you talk about, fitting the requirements, but also it's a discretionary area of the ATO to decide whether I get approved or whether they get approved for an ATO plan. How does my application need to look like? Should I have some level of, cash liquidity in the bank? Should my running balance should be strong? If in the last 6 months, my bank statements, if that's how they analyze it, is in reds, do you think I will likely get supported by the ATO? Like where do you think they need to look like?
Yeah, good question. And look, and again, it depends on where the information that a business or a taxpayer needs to provide does vary from taxpayer to an extent, and it does depend in what area. And I mentioned before how far along that process they are, but the information can range from broad, high-level financial information about income, expenses, and so forth, to demonstrate and assets and liabilities, to demonstrate that the business can actually afford, if they've got a $200,000 tax debt and you're proposing to, pay $10,000 a month, well, can you afford it? You have to, because the ATO is not going to approve it unless they can. So depending where they're on there, they may take that, and that's information that needs to, it's better if it's provided through a professional advisor like your accountant or us and everything, because the ATO sort of then know that it's had, I guess, a level of scrutiny around it. Down to the other end, the ATO has the power to request, the last 2 years' financials and year-to-date financials. And if they don't support the two things I mentioned, that they can make the payments, that the business is viable, then they'll refuse it. So there's a whole range of information that needs to be provided. Sometimes we have to provide cash flows if the financials don't support it, but we know that and particularly coming out of COVID, everybody's financial. So if you assessed any business based on that, they were never going to get a payment plan through. So we had to shift how we dealt with the ATO, and we liaised with the ATO around this and said, look, the historical stuff's largely, useless for you. And then so we I guess, developed what we could put to them to show what the business is doing moving forward, so that they could actually censor that and approve it almost on, not quite, because you've got to be a little bit careful with cash flow forecasts, because they're not stupid. Anybody can do a cash flow forecast and put anything in there. So there has to be a level of substantiation around that forecast. So it's a whole range of stuff that has to be put.
Absolutely. That's really good. And look, we have a number of brokers and accountants as well here on the webinar. Could you possibly explain how they can help with the business owners and customers with ATO debt, and how you can help them to do this?
100%. Before we do that, could we just jump to the next slide? I had a case. If we might go back, if we could, Aisha, to the case study. Yeah, that one, just to give people a bit of an idea of, you've heard me talk a lot around this sort of stuff, but just to give a sort of a real life example around this is something we just finished recently, where it was a construction company in Queensland that came to us. You can see they had a $1.4 million debt. Like many construction companies, construction's been one of the hardest hit industries,
Yes.
particularly coming out of COVID, but lockdowns, cost increases. This company, like many of them, had fixed price contracts which were no longer viable, getting resource, staff, everything. They were one of the businesses that have been reported to the credit reporting agencies. And I mentioned before, that again has a huge impact, because they had a private funder, and the funder was getting nervous and saying, look, we don't know if we're going to support this business anymore. On top of that, they also, this was the one I was talking about, I mentioned before, where all their suppliers said, well, we're putting you on COD. Now, most construction companies can't survive on COD. They need payment terms and everything. So they were sort of in a really, really difficult place. And on top of that, through their accountant, we were told the ATO, in fact, when we spoke to the ATO, they said they're 5 minutes away from getting director penalty notices, and then we're going to wind the company up. Obviously very stressful for the business and stressful for the directors. They were referred to us by their broker around all of that, because they'd gone to the broker. The broker wasn't able to assist them with finance, but they knew about us and said, look, I think these guys might be able to solve this for you. So what we did was two things. Firstly is that we provided, and we're doing this more and more, it's something that's, we've done in the past, but more and more at the moment, is we provided a comfort letter to the business that was able to be provided to the funder and to the suppliers, which was able to say, look, let the business keep trading for the next 4 to 6 weeks while we solve this. We're engaged this is what we're looking to achieve and so forth. They were able to do that, and then we were able to get them into a long-term sort of payment arrangement that fitted their cash flow. It wasn't a straight line one because they were still recovering from all of the things that had happened. We were able to remove $260,000 in interest and penalties for them, which again, off a $1.4 million debt, made a huge difference for them. But most importantly, we got the credit agency listing removed. And the thing with this too is that, and there'll be a lot of people who understand these sort of reporting things probably a lot better than I do. But one of the things that happens around them is you get reported, and yes, you pay out the debt, but it sits there. Yeah, with the ATO debt, it's different. It was one of the conditions that the ATO put on providing this information. Once it's removed, it's actually permanently removed. Now, it doesn't help the alerts that have already gone out, but it does mean that if it's a new person dealing with them, it's off permanently. So, they were able to get them sort of back on their feet. They've now got an arrangement to take it forward, and they're back trading business as usual.
Fantastic.
So, if we can jump to the next slide, and you mentioned about that dealing with working with brokers. Yeah, and again, we do a lot of our work comes through the broker network. And look, as I sort of said before, there's a lot of businesses out there that have debt that they probably can't pay out of their normal cash flow. So there's a real opportunity. And I often say to people, if I was going into the broker world right now, I'd just target these businesses because there's plenty of them out there. They need help. They've got good businesses, but they've just had some stuff happen in the background over the last few years, and they just need help. So the other thing too is that there's a lot of directors getting those direct penalty notices. They're looking for finance and everything. So, but in terms of, I guess, how we deal, firstly, we again engage with the ATO to stop recovery action, because the last thing you want to do as a broker is you partway through a deal and the business gets issued with a statutory demand or gets a credit reporting. Then the funder goes, and then it's very, very hard to replace them. So what we do is get engaged with the ATO to stop those things happening. And then we agree a timetable with the ATO for funding to go through. Everybody's on board and it works through. The other thing we often see is, some lenders require the debt to be paid out in full on settlement, but there's not enough equity. So we'll go in and, if 30% of the debt's interest, that's often the difference between a deal and a non-deal. So we'll get in and do that. The other thing around it too is that if there is debt that's going to be left there post the refinance, then often one of the lender requirements is debt's managed. So we'll get in, put a payment plan in place, keep the debt down, and that helps get that deal across the line. The other area we work with brokers is if, with their existing clients that they've had them for years, but they've run into trouble. So they'll just refer them to us so that we can keep them as a viable client for them. And I guess the other thing too is I had one broker when I first started doing this. He said to me, God, for God's sake, don't tell anybody else you're working with us, because we use you as a value add. We say, come with us because we've got tax assure. And not only can we do your refinance, but they'll go in and fix your tax debt. They'll get you a tax refund, yada, yada, yada. So, we're a great value add. I often say to some of the brokers that we deal with, use tax debt as a reason to go back and have a chat to the client and say, look, we know this. I've just been to a seminar. We know that there's, $50 billion in tax outstanding. How are you guys going? Do you need some help with that? Got somebody who can help you. And, we do that. And also they walk away with a new deal. So, and then we've got others that just, they've got things they can't place for whatever reason, like the one that I mentioned and everything. So they'll just refer those options again, just as a value add to their client.
Absolutely. I've got a question from the audience. And it's, what key questions do I need to ask or discuss with my accountant to make sure I'm on top of my tax debt? So instead of, talking to them when with a outstanding tax debt, how do I prevent that from happening?
Oh, look, if you want to prevent a tax debt, quite simply, it's going to sound trite, pay tax, but that's really easy. One of the things I often say to people is that, sit down with your accountant, work out we do this, work out what your because they can generally predict for most businesses roughly what each, whether you're on a monthly or a quarterly lodgement cycle and everything, and with your income tax, they can work it out. And so I always say to people, sit down with your accountant. They should be able to project out what your tax liabilities are going to be for the next 12 months. And they can tell you what that is. And then set up a separate bank account. Every month you put that money in there. So it's there. And when tax time comes around and you've got to lodge, the money's there to pay. That's certainly the thing. And then, if it is the case that you do end up with a tax debt, which is probably the other part of that question, is that if you do end up with a tax debt, then, and you want to know the thing you need to know is that you are in an active payment arrangement. And, we see so many clients who say, look, we've been paying money to the ATO, we haven't heard anything. Our accountant's been talking to them, and then bang, they've got one of these nasty documents. It's, one of the slides back, I said active engagement is key. The ATO have defined that active engagement means in an act. It doesn't mean talking to them. It doesn't mean paying money to them. It means in an active payment plan. So the thing you need to be doing with your accountant is to say, well, look, am I in a payment plan? Can I have a copy of the document chosen? Then you need to make sure you meet all of that. You have to meet them to the day. If you default, if it used to be if you were a few days late, you would default the payment plan. Now the ATO are giving a little bit. They don't tell you how long, but they're giving a little bit more time around that. But not where people get into trouble is they make the payments under the payment plan, they miss a BAS, or they pay a BAS a couple of weeks late. That defaults the payment plan. So you need to make sure that you take the responsibility to make sure you're meeting all those payments. And if you're not sure, you ring your accountant and say, can you go on the portal and check whether my payment plan is still active? And if it's not, then act quickly.
Very good. And I guess if there are people here that want to connect with you after the webinar, how do they engage with you? Could you share a little bit your contact detail this way?
Absolutely. And maybe, Aisha, if you want to, this will go out. That's just another one. I won't probably go through that. But look, yeah, very, very simply, depending whether it's you or it's one of your clients, because I know we've got a sort of a mix of businesses and advisors on the webinar. Just pick up the phone. You've got our contact details for all of this, and have a chat, and we'll have a. We're a bit weird. We kind of like talking about tax debt, so we'll have a chat and see if we can help. Generally, we can. And then if you're an advisor, then it's just a simple email introduction to us. For every client that comes to us, we do a full review with the ATO, find out exactly where you're at, and then we provide a short report to the business that says, this is where you're at with the ATO. And that often we find, particularly when we're talking to people, they don't realise where they are at with the ATO and everything. But there's a whole bunch of questions that we ask around all of that. So it tells you where you're at with the ATO, what we think we can do to improve your situation and get you sorted, and then we provide the costs that are associated with that. But we don't charge for all that initial stuff to have a chat to the ATO and find out where you're at, because that's part of our due diligence. But also, we don't want people to not come to us saying, it's going to be too expensive just to pick up the phone and have a chat. So it costs you nothing to have a chat. It costs you nothing for us to do a review. And partly too, when we find that when we do that, 90% of people say that's great, let's just go. And so then we get on with it. If there's an advisor involved, and particularly if it's a broker and there's a transaction that's needed to be done, then we work hand in hand with them. We work hand in hand with the accountant. There's lodgements to be brought up to date. So we sort of work as part of the sort of broader team for the client, and we sort of manage the pieces that we need to be, but also manage the bits that we need other players to do. And I've just mentioned there in terms of our fees, they're fixed and we agree them up front so that there's no surprises, even though all our advisors are all senior lawyers, but we don't do hourly rates. We're all happy not to be filling in timesheets anymore. So we agree a fee. And look, most of our clients end up cash flow positive because we save them what we charge.
Fantastic. Thanks, Michael. Hopefully there's been a lot of takeaways. I've actually written a couple of things myself to then discuss it with my own clients at a later stage, or some of my partners too, to kind of help tackle some of these problems. The worst thing is, the one thing that I know that is quite evident is that as soon as there's tax debt that's standing and not on a payment plan, I know that lenders typically say automatically, no, we want them on a payment plan. So that's been also enforced with some of our lenders and your partners. Worst thing as well as your trade terms. If you don't want them to lose that, then get on top of it, really. But yeah, thank you everybody for joining. If you have any questions, happy to wait a couple of seconds for you to drop it in. Otherwise, you'll get a recording of this link so you can go and study how to do this.
Right. And the final thing, if I could say, Cynthia, is if one takeaway from this, whether you're an advisor or a business, just get in contact with somebody and start the process, because time is not on your side. But as I mentioned before, there's almost always a solution. We're helping businesses all over the country. We're a national business. We help businesses all over the country and get in out the other side. And directors are saying, I'm finally getting a decent sleep at night, which I haven't had for some of them for more than 12 months. So there is a solution.